Are you dreaming of owning a home, but that giant upfront cost feels like a brick wall? Well, what if I told you there's a powerful but kind of overlooked tool that could completely change the game for you? Let's talk about the zero down path to owning your own place. I mean, really think about it. For most people trying to buy a home, it's not the monthly payment that's the scary part. You can handle that. No, the real mountain to climb is that huge pile of cash you need right at the beginning, that down payment. It's just so intimidating. And hey, if that's you, you are definitely not alone. This is one of the biggest struggles for first-time buyers everywhere. It can turn that exciting dream of owning a home into something, well, just stressful. Let's just put some real numbers to this. In a place like California, the average down payment is a whopping 13% of the home's price. So on, let's say, a $500,000 house, that's 65 grand in cash, just sitting there. It's a lot. But what if you could just skip that part entirely? All right, so let's get into the good stuff. There's actually a government-backed program designed to solve this exact problem. It's not for everybody, and it's not for every house, but for the right person in the right place, it's a lifesaver. It's called the USDA loan. And this is the magic number. This is what makes the USDA loan a total game changer. 0%, as in 0% down. That's right, you heard me. We are talking about 100% financing for your new home. It's incredible. Now, you might be thinking, what's the catch? But this isn't some late-night infomercial gimmick. This is a legitimate loan program, and it's backed by the U.S. Department of Agriculture. It was created for a really specific reason, to help people buy homes and, build up communities in less dense areas. Think rural, and this is the important part, a lot of suburban areas too. Okay, so the big question is, who actually qualifies for this thing? Is this path for you? Like I said, it's not for everyone, and it's not for every property. There are basically two main keys you need to unlock it. And here they are, the two big pillars of eligibility. It's a pretty simple formula, but you gotta meet both. It all boils down to two things. One, where the house is, and two, how much your household makes. So let's break that down a little more. First up, let's talk about the property itself. The home has to be in an area that the USDA officially calls rural. Now, don't let that word rural throw you off. We're not necessarily talking about a farmhouse in the middle of nowhere. You would be absolutely shocked how many regular suburban neighborhoods just outside of big cities actually qualify. The best thing to do, just go to the official USDA website. They have a map where you can type in any address and it'll tell you instantly if it's eligible. Okay, the second piece of the puzzle is your income. The whole point of this program is to help people who might need a little boost, so there are income limits. Your entire household's income can't be more than 115% of the area's median income. And that number changes depending on what county you're in, so don't guess. The USDA website has a calculator for this too, so you can check the exact limits for where you want to live. All right, so you've checked the maps, you've checked the income limits, and it looks like this could work for you. Awesome! So what happens next? Let's walk through the actual step-by-step process of how you go from here to getting the keys to your new front door. It's basically a 4-step journey. And like any important journey, the first step is to find the right guide, someone who really knows the ins and outs of this specific path. Step 1, and I cannot stress this enough, is to find a lender who is an expert in USDA loans. Not all lenders do them, and frankly, you don't want a generalist. You want someone who lives and breathes this stuff, who knows the paperwork and can make the whole thing go smoothly. Step 2 is getting pre-approved. This is standard for any home purchase, but it's super important. It has two huge things for you. First, it tells you exactly how much you can afford, so you're not wasting time looking at the wrong houses. And second, it gives you that powerful pre-approval letter that tells sellers, hey, I'm a serious buyer and I've got my financing lined up. So, what's the lender actually looking for when they're deciding whether to pre-approve you? Well, they're going to look at your whole financial picture, of course, but they really focus in on a couple of key metrics. Let's talk credit score. Now, interestingly, the USDA itself doesn't actually have a strict minimum score, but the lenders who give out the loans do. And for most of them, the magic number is 640. If your score is 640 or higher, your application is just going to have a much, much easier time getting through the system. The other big number they look at is your debt-to-income ratio, or DTI. It sounds complicated, but it's not. It's just all your monthly debt payments, your car loan, credit cards, student loans, added up and compared to your monthly income before taxes. As a rule of thumb, they want to see that all of that, plus your new mortgage payment, adds up to less than 41% of your income. Okay, you're pre-approved. Now comes the fun part. You actually get to go find your house. Once you find the one and get it under contract, the process moves on to the appraisal. And for a USDA loan, the appraisal is a little different. It's not just about making sure the house is worth the price, it's also an inspection to make sure it meets the USDA's minimum standards for safety. They want to know it's a safe, solid place to live. Okay, we are in the home stretch now. You're so close to the finish line. We've been talking a lot about that amazing zero down benefit, but there is something really, really important we need to clear up. Just because it's zero down does not mean it's zero cost to get the keys. This might be the single most important thing to remember in this whole explainer. Zero down is not the same as zero to close. You're still going to have closing costs. These are just the standard phase for things like the appraisal, title insurance, and all the legal stuff to make the house officially yours. So what are we talking about here? Usually, closing costs are somewhere between 2 and 5% of the loan amount. But don't panic, you've got options. Great options, actually. Of course, you can pay them with cash if you have it. Sometimes you can even roll them into your loan amount. But here's the real pro move. You can ask the seller to pay them for you as part of the negotiation. Sellers are allowed to contribute up to 6% of the sale price, which in many cases could cover all of your closing costs, meaning you really could get into the house with very little cash out of pocket. So when you step back and look at the whole picture, the takeaway is pretty clear, right? Your path to owning a home might not be in the exact spot you first imagined, like right in the heart of the city. But with a powerful tool like the USDA loan, that dream could be way, way closer than you think. What if your key to home ownership is just waiting for you, a little bit outside the city limits?